Kenya's shilling is headed for its lowest level in a year. That's where it stands right now, extending last week's decline after the central bank slashed interest rates more than expected. Roy Daniels, head of Africa trading at RMB, joins us to discuss the Kenyan economy, and we'll also glance over some other key economies in Africa. Roy, thank you for joining us on the desk this afternoon. So let's kick off with Kenya. I talked about the shilling there. We had Isaac talking about stability when it comes to inflation, and of course he mentioned barring political risk, and of course that is something that is a key issue right now. So you've just set up an office there on that side of the world in Kenya. From RMB's standpoint right now, what's the investment thesis for Kenya?
Hi Sam. Firstly, the office in Kenya is just a rep office.
Yeah.
So we haven't gone into full banking operations there. Not saying we won't, but for now it's on hold. The outlook for Kenya, I think if we look at the uncertainty around the political environment, I don't think we're going to see a flood of foreign investment back there just yet. I think we need to get past the elections, and we can have a relook at it there. I think that the shilling where it is, it's not a train smash at these levels. It can weaken even slightly further from here. No one's going to be too concerned just yet. It'll probably get up to the 88s, maybe the 90 levels, but I don't think it's a concern around the inflation side just yet. I think that it's a kind of a neutral or on hold kind of strategy for Kenya for us right now. We haven't got too much risk in the Kenyan markets, so we're going to stay that way probably through until after election time. You know, we don't expect any trouble over elections. We're not saying that there's going to be trouble leading up to elections, but you know, for us it'd be prudent to be a little bit cautious just now.
What about the likes of, say, Kenya versus Zambia, where, of course, we've seen a lot of changes? We were talking about the new changes yesterday on the show, talking about the increase in reserve ratios for banks, and many saying that's almost offsetting some of the other changes that have been really focused on increasing liquidity in the sector there. But overall, how are you viewing the changes in the Zambian economy right now?
I think there's a lot of change that have gone on. I mean, certainly we've gone through the rebasing from the ZMK to the ZMW now, less, divided by 1,000. So that's put a bit of disruption in the market. And I think a lot of guys have been dealing with that. So there are a lot of players that have stayed out the market. I think if we look at the central bank's changes to the market, and they've introduced another one, we got wind of a circular today around the brokers in the market. We didn't quite understand why that came out. I think the brokers add liquidity to the market and not the other way around. So we've got positions in there. We still think it's a good market. We still think that there's good value in the market. The measures that are being put in place do concern us. I think it's bordering on whether it's now full-blown exchange control regulations and scaring away the foreign investors, or is it just the central bank wants to control the market? Now, it's important that it's there to control the sort of liquidity, maybe control the vulnerability of the currency, but not seen as full-blown intervention. You know, it is attractive. Guys have always liked it. We still think it's a good market. We still think that inflation's coming lower. We still think it's worthwhile holding bonds in the market. There's a lot of cash in the market, so we've seen huge demand for the T-bills again. Those yields have come crashing down as guys look to put their funds somewhere. So it's still a positive market, but we're getting a little bit nervous around some of the sort of additional measures that are being contributed to all the time.
Yeah, let's turn our attention to West Africa. Ghana had an auction of their bonds last week, and yields are falling sharply there. So what do you think has caused the sell-off, the kind of downward pressure on yields in that economy?
I think it's just great yields and good demand. I think guys are still looking for good yield across Africa. I think the West Africa picture is a good one. I mean, we've got sort of demand for Nigerian assets. Guys are now switched across the border into Ghana as well. Look at it. It was a strange drop for us to come down from 21% to 16.74, I think it was. So that's a huge drop in the yield market. We expect that might tick up a little bit from there. But I think that's a case of one large investor looking for yield and going out to try and buy up the entire allocation at the market. So,
so skewing that auction.
Skewing it and a little bit sort of, over demand from one person. So skewed it slightly. But again, West Africa we think is a good picture. Certainly from our trading view would be it's a buy and hold strategy for both countries at the moment.
And Nigeria, you talked about Nigeria holding an auction of 5, 7 and 10-year paper next week, reopening those. What are your expectations on that front in terms of the trends we're going to see in yields in that space?
I think it'll be a slight move lower in yields. I think it'll be oversubscribed, and the central bank will have an opportunity to pick as to how far they want to go with it. I think they will pick up the full allocation again, and I think it's a good buy. It certainly it's certainly good yield. The currency's been very stable. I mean, it's set around the sort of 156 to 158 levels, touching on 155.90, I think, in December. So still good value. Certainly on the stock exchange side, again, the equity side, we've had some discussions with some of the guys there as to what they're seeing, and they still seeing some good demand for the equity markets. But Nigerians are typically bullish, so they do fancy their market. They are saying, Nigeria is definitely a buy. So look, I mean, it's we might not be as aggressively bullish as they are, but we certainly think it's a buy strategy for both Nigeria and Ghana. I think West Africa is good.
Tough to find a Nigerian, as you say, who's going to talk the economy down, especially in the race to become one of the largest in Africa. Yeah. What about Mozambique right now? I mean, what's your kind of view on the economy? We're seeing strong growth forecasts coming out there, changes when it comes to investment in the power sector. Of course, it's the mining sector that's really going to fuel growth.
Very bullish again. I mean, there's a lot of good stuff happening again for Mozambique. I think the T-bill markets weren't oversubscribed as to what was provided in the auction today. So showing signs that maybe rates are probably bottoming out at the moment, but still a very bullish picture. Certainly still a lot of investment going on. We'd like to, I think, to finally convince us, we'd like to see something from the central bank around, probably more relaxation around sort of foreign investors accessing those bond markets. I know that the last auction they did allow it. We'd like to see that continue. But around, how do banks then fund themselves? I think it's one thing saying to foreign investors, you can invest in our products, but we should be allowed then they should allow some form of funding, not just always buy the currency. But it's not my place to tell central banks how they should run it, but something that we'd like to see.
Yeah.
And again, probably a little bit more happening on the infrastructure side. It's something that we've mentioned before on the show, that investment in infrastructure in Africa is the key part. It's one thing, there's these investment funds coming in, they've got to be channeled in the right direction.